welcome and thank you very much, everyone, for attending. We've got an hour with a topic like this that kind of has us just rushing past the buffet. But that's fine. We'll start with that. We'll get that information rolling. I think you'll find that Ozgur and his colleagues from UK Export Finance are a wealth of knowledge, and we have some background and context to provide to you from the standpoint of how CCC works. So I'll start as your MC and host. I am Wilson Pearce. I'm the Senior Director of Trade Strategy and Operations with the Canadian Commercial Corporation. I've been with CCC for about 3 or 4 years. I was originally an exporter, came into the organization because of my interest in the mandate in helping Canadian companies develop, secure, and manage contracts with foreign governments abroad. I'll stop there because I will talk a little bit more about CCC in a moment, and maybe I'll hand the mic over to my friend Ozgur, who will introduce himself and his colleagues from UKEF.
Wilson, thank you very much. I hope you can hear me well. I'm Ozgur. I'm based in Toronto, in Canada, with UK Export Finance. I'm one of the, or part of the international network, which is now about 25 people around the world. I am a former banker, a corporate investment banker, but I've been with UKEF now for 8 years. But last year and a half in Canada only. And we're proudly joining today this conference call based on the MOU we signed last year with CCC to join forces and help both countries' exporters out. I'm also joined by a couple of my colleagues from UKEF HQ in London. First of all, there is Natalie Ribovage, who is a senior Business Origination Officer. Hi, Nelly.
Hi, everyone.
Hope you can hear us. Okay.
Very quickly, happy to just jump in. My name is Natalie. I'm a Senior Business Origination Officer. I'm London-based, supporting Ozgur from abroad, but pleasure to meet you all. Josh, as well, from our defense team, is just having some issues logging on, so I'm just going to work in the background to get him on the call.
Perfect. So that means, for the time being, that's it from UKEF. Back to you, Wilson.
All right, great. Well, again, in terms of the agenda and the flow for the webinar today, we're going to start. I'm just going to give a brief intro around the Canadian Commercial Corporation for those of you on the call who may not be familiar with us. I'm going to talk a little bit about the market overview and the market opportunity, specifically with respect to the defense and aerospace market in Europe. We could have another extended call on defense and aerospace markets in other regions, but for a number of reasons, we'll focus on the European market today. And then from there, I'll talk a little bit about the context, in terms of the relationship between CCC and UKEF. And then I'm going to hand the floor over to Ozgur, who will walk you through a number of elements of UKEF, how UKEF operates, some real world examples. We're going to talk a little bit about how you would apply, like how and when you would apply for Export Credit Agency support from UKEF. I'm going to assume the Export Credit Agency world is one which we're all generally familiar with, but I think you'll pick up some more knowledge on that just in listening to Ozgur describe UKEF. So having said that, CCC, Canadian Commercial Corporation, we're a Crown corporation. We report to the Minister of International Trade. We've been in existence for a little over 75 years. Our mandate is to work with Canadian exporters who are selling goods and services to foreign governments abroad. That covers a wide range of sectors. The largest part of our pipeline at any given point in time is aerospace and defense, and that's because of the nature of aerospace and defense sales. They tend to be the kind of sales where a foreign government buyer is buying directly. It's not always a B2B. It's more of a B2G kind of sale. And it's the kind of sale where the foreign government is interested in getting the kind of security and transparency around the contracting process that CCC delivers. What I mean by that is that we will step in and do a due diligence on Canadian exporters. to ensure from a financial, managerial, and technical standpoint, they have the capacity to deliver the goods or services that are being sought by a foreign buyer. And so we do that by providing a performance contract guarantee. And the way we provide that guarantee on the contract performance is that we actually sign the prime contract. Now, in signing the prime contract, we're actually signing your contract as the exporter. Your technical, commercial, and related details are yours. We're simply assuming the responsibility for the delivery of that contract, and in order to do that, we're required to sign that prime contract. We then immediately sign a domestic with yourselves. We are strictly a contracting body. One of the reasons we have this relationship with UKEF, Ozgur will describe in more detail, is that it's invaluable for us to have relationships with export credit agencies and banks, including our own Export Development Corporation, Canadian banks, regional and local banks, because the financing is part of the transaction. We're not a signatory to that, but it is part of the transaction. So we think it's important that people are familiar with that. Now, let's talk a little bit about the European market. I think I don't need to reread the Globe and Mail, BBC World News, CBC, or anything like that in terms of world events and what is triggering a renewed interest in spending in defense and aerospace by a number of jurisdictions around the world. But it's there, and you know, spending, I think, in the European market alone, it's expected to be a little over almost 400 billion euros this year, moving up to somewhere in the area of 800 billion euros by 2029. So it's a market which is growing significantly. Canada has a couple of interesting angles into that market, if I can speak strictly as a Canadian exporter. One of those angles is courtesy of our access to a program called the SAFE program, and it's a program design, financing, and management entity that is run by the Europeans. We joined SAFE in December of 2025. We're the first, and to my knowledge, the only, but we are the first non-European participant. So this is a program which is really designed to encourage the development of the defense and aerospace sector within Europe. We have been granted a privileged access into that market. However, it's not a unique access, and for a number of reasons, it often works best if we partner with firms who are already within that market as well, which Ozgur will speak to a little bit in terms of how Canadian firms and UK-based firms, when they partner, they begin to have access to things like the UKEF financing. But that's one of the issues. There are programs like SAFE and a couple of these programs that are being put in place by the Europeans, along with an effort to streamline some of their procurement, which is all designed to open up the European market and accelerate some of the procurement activities that are going on in there, supported by a combination of financing vehicles, which are intended to allow people to quite literally put their money where their mouths are. Canadian firms, we're not unique in the world. You know, there's lots of companies doing lots of different things, but there are a couple of areas where EU-backed joint procurement and procurement in general may be of interest. First of all, the European Union investment is focused to a large degree on on dual-use technologies. That's cyberspace, AI, space, electronic warfare, integrated defense systems. Those of you who've been working in the sector know that as Canadians, we're generally building defense solutions that are designed to be NATO compliant or integrated with other areas, simply because there's not enough Canadian purchasing to justify a lot of this design all by itself. So we're well positioned as Canadians to access this market because we think about integrated design solutions. We're focused on Arctic issues, which is a little bit unique. And as I said, we've got skills in areas like drones, cyber warfare, electronic warfare, space assets, and things like that. So there are some unique areas where we bring skills and technology to the table. And one of the things, for anyone looking at market growth and market development is you're often looking to partner. Going in all by yourself as a Canadian is often a pretty tough way to enter a market. The Canadian Commercial Corporation can help. We can provide you that Government of Canada branding, basically, as you go into those discussions. But in terms of the ongoing delivery, the maintenance and support, the local presence, the local business culture, it's really important to partner with companies that are already in the market. So just almost a year ago, we signed an agreement with the UK Export Finance Organization, where if you sign a prime contract, the G2G contract with Canada, and you have you meet the criteria for financing, which generally involves an element of the UK in your supply chain or in your partnership, it makes you eligible for UKEF financing. So we wanted to talk a little bit more about that, just to start prompting some thoughts in those areas around what's possible. So I think I'll stop there. I'm just about where I wanted to be at 11:15. I'll pause there. Ozgur will speak for at least probably the next half hour. He's got some really interesting information to go through, and then we'll have a bit of a Q&A in the last 15 minutes. So I think I'll turn it over to you, Ozgur, and I'll jump in occasionally, but off you go. Thanks.
Wilson, thank you very much. I think it was an excellent introduction to the discussion today, giving the background and the geopolitics that has been sort of stealing the headlines in the last 1 year and is going to stay longer. I am hoping to share my screen and share with you some slides. I'm hoping that you're seeing them as we speak. So we are, okay, great. We are a UK government department, essentially. So we're not a crown corporation. We don't have a separate balance sheet, but working as part of UK government brings a lot of flexibilities, and we are reasonably take pride of being the first export credit agency that was set up in 2019. Over time, obviously, the environment has changed dramatically. Had quite ups and downs economically, politically around the world. But UKEF has always been more on the innovative and flexible side when it comes to export credit agencies, which I'm going to point out in a minute how we ended up with this webinar today and how we can join forces with Canada, some of the projects that qualify for the exports of both countries. We are, just to position, we are offering debt financing. So it is not equity, so it's not an investment financing. We're providing international debt that is in a non-concessionary basis, which would be close to commercial debt. And we've been doing this for a long time using a lot of our banking partners, including some of them from Canada. Last financial year, we were able to underwrite £14.5 billion of new business, and that included a mega size defense deal with the Polish government. In fact, we were financing about over 8 billion pounds of financing of short-range air defense missiles. Maybe moving couple slides, maybe here quickly. This is a bit outdated, and I'm proud to say that our capacity is now being increased over to 160 billion. Hopefully, there's a parliamentary discussion in the UK to double our support. So that's good news. That will give us more firepower in the coming year, financial year, that is 1st of April.
Yeah, Ozgur, sorry, I'm going to jump in just for a second. We seem to have sort of inconsistent ability to view the slides. So somebody just asked. Yeah, we'll be sharing the deck afterwards as well. So Ozgur will be speaking to the deck.
Yes.
That looks
We
different. I wonder if people are starting to see slides
We will.
now. We'll deal with our technical issues, but yeah, apologies for those of you who can't see the slides, but we'll be sharing them afterwards as well. Sorry, I didn't mean to jump in, but
Okay, no problem. I hope majority sees them. I can see them on the screen, so thank God. And maybe a few points on this one to step on some of the differentiating factors in our offer. One is the strength of the UK back guarantee. Since we are a government department, when we sign that guarantee agreement that a bank funds your clients, ultimately, these are different countries, usually governments different of this world. We will provide 100% unconditional guarantee on the amount that we agree. So that is quite strong. So I used to be in the lending business in commercial banks before. It has always been an issue when an ECA comes in and guarantees 90%, 80%, 98% different times. But it's always very, very good when you have this 100% guarantee, so the bank can really deploy their funding under our guarantee to that project or to that purchase without or less with less strings attached, I think. The second, I think, most appealing part of this conversation today is that we would require a minimum 20% of the contract value or our financing to be spent on UK content. And I'll come to what we mean by UK content in a couple of slides. But essentially, that gives a lot of flexibility, a lot of money on the table to be used for the Canadian content, obviously, but also local content in those projects. We have existing footprint on 23 different countries, usually located in British embassies or high commissions or consulates, myself being in Toronto. So we provide a lot of assistance to these projects, businesses, buyers, by just being on the ground. Some of us cover more countries than the country they're residing in, like regions, but that gives us a good access on the ground and understanding the matters around financing or the purchase. So that's definitely a strong edge. We provide long-term financing, competitive rates. We have over 60 currency options as well, although we expect most of the defense contracts are priced in US dollars, euros, Canadian dollars, British pounds, and yens or Swiss francs, so the G7 currencies mostly. I'll move to the next slide. This shows the basic diagram of how we would finance. I hope most of the people can see that. When I say UK exporter, you can consider this as the bidding consortium. So there must be a UK exporter or a UK export element in the bidding consortium. There's an export contract with the buyer. So this is your CCC-led contract, right? And then UKEF comes in and provides a guarantee of repayment, as I mentioned, through three different products. One is the buyer credit, which is the most used one, where we provide a guarantee and a bank here on the right-hand side funds the buyer. It might be the sovereign of a country, the Ministry of Finance, Treasury of a particular, or Ministry of Defense of a country, through a loan, right? So that this bank doesn't take the risk of that buyer or that country. And in case of things go wrong, they have full recourse to UK government. And that makes obviously the pricing and the terms much more sort of accommodating for the project. We can also offer a smaller version of buyer credit that's below 30 million pounds. We could do that as well. Less likely with a sovereign, but it is possible for us to do any size. And there's also a direct lending option, which is usually very, very limited. And we would always try to prioritize deals that have the highest UK content for those, which includes a limited pot. But yeah, that is the three main products that we can do. This is a chart about where we come in, where we fit in terms of the global financing food chain. Obviously, on the very left hand side, the beginning, it's the grants, right? Which we don't do, but many countries do. They come in and provide grants. There are these concessionary lending structures, mostly the international multilateral financing organizations. That's the World Bank, the America Bank, the EBRD, and the African Bank, and so on and so forth. But ECAs come in between them. ECAs are commercial and the pure commercial banks, right? Where we would be providing an advantage over the pricing and terms of the project, as seen here. So during the product life cycle, in the very early stage of technology, that's the dark blue line, you would be using probably grants, equity, and concessionary lending, but as goes into maturity and starts generating revenue, the red line that is, that's where the public markets, commercial banks, ECAs, UKEF, or others are interested. And obviously, eventually it ends with a Eurobond, the capital market, which is very common for the developing world to issue fixed income debt instruments by their governments, usually in the international markets. This is how the economics work. On the left-hand side, you have this large light blue box, which is actually the risk premium that is paid by the borrower. Let's say it's a double B developing country, and there's a risk premium on top of the funding cost, which also has the bank profit margin, as well as covering their operating costs. On the right-hand side, the two boxes, the red and the gray, remain as they are, right? They don't change because the bank needs to make that profit again, and the operating costs are pretty much the same. But we're trying to reduce this light blue box to the right, where the risk premium of our AA guarantee and 100% government-backed guarantee will reduce it significantly. Even if with our ECA premium, which I'm going to explain in a couple of slides, added together, it should be much less. In most cases, the sweet spot is either the non-investment grade or low-end investment grade. And looking to the ambitions that would look into financing, and where the CCC obviously will be the leading contracting party, G2G contracting party, you would expect a lot of the developing countries anywhere around the world, Asia, Latam, Africa, Middle East, Eastern Europe, right? Part of NATO, but kind of like rating-wise a little bit behind than the developed world. Those are going to be the best targets. Moving a little further, UK content, and I think this is quite interesting how we define UK content. We're one of the most flexible export credit agencies, and I'm going to just walk you through three main areas of UK content, which is because we are requiring a UK element in your contract, and it could be your consortium partner, or it could be your supply chain, where you could be using part of UK supply chain in terms of goods or services already. And if that makes up, from a value added point of view, a minimum 20%, preferably a little higher, we would be very happy to have a 30%, 35% in a deal, then that we will consider that deal. So we include goods in the middle here, which is the products applicable for a UK country of origin certificate, which are goods that are made or altered, modified in the UK, because we're talking defense here, and I'm not talking very simple widgets. Obviously, these are complex systems. So we will go by the value added part of a solution, a system solution in defense, right? What is the percentage of that particular end product is made in the UK? And that's up to the exporting companies to tell us that. And services is quite interesting. If there is design, engineering, legal, consultancy services, and in defense area, there could be, services provided through know-how transfers, things like that. These could be also counting towards the UK content. So let me stop here just to re-emphasize there is a low threshold already so that we can combine forces with Canadian exporters. That is a minimum 20%, preferably a little higher, but that is our rule. And then this is also easier, or provides an easier way to reach that low threshold, relatively low, easy threshold, by combining services, goods, and also intangibles on the right-hand side, which is the intellectual property rights. So there's a patent, license, trademark, whatever in the sort of solution, the final product, we will consider it as UK export content. The supplier fairs are the ones that we bring in. If there's a project that is still looking for additional suppliers, we can always make a day in London. Usually we bring in UK suppliers related to that project. It's like a road show, but a commercial one. Some presentations by the lead contractor, ourselves, the bank, the borrowing country, their MOD or whatever, and then the afternoon usually is the one-to-one meetings to make up for that. So a summary, at least 20% UK content. The overseas company would approach UKEF and present financing to their buyer. G2G contracting can be supported, as in the case that is done by CCC. So it can be the lead Canadian company that is in the contract under CCC can approach us, or likewise, if it's UK and having Canadian content, we can be able to do that as well. Procedures are otherwise regular. We provide expressions of interest letters if needed at the bidding stage for that project, and we will leverage our overseas network, as I mentioned. And that's not only us, the 20 or 25 live bodies in the network, but also using the British diplomatic network as well, where it's helped together with the Canadian network, of course. Let me just go over, and if there are any questions, I have my Deputy Head of Defense also on the call, and we can have the detail. But the defense area provides us to be able to deal with non-OECD terms. So outside the OECD arrangement, which is even more flexible. So we can go up to 100% financing of the contract value. That's good, rather than up to 85% in civilian world. We can provide local content support. So if increasingly countries will require local content, right, in those solutions, especially in defense, as the defense spending increases around the world. So if you have a project in Indonesia, right, if the government requires some local content as well, we are happy to look at it and consider that. And the repayment tenors, so beyond the delivery of the project, right, whether it's a service or it's a sort of project building something together or just selling some equipment, once it's completed as per the commercial contract, then our repayment tenor starts, and that can go beyond the off-the-shelf common arrangement term by OECD, which is 15 years, so we could do longer, and we can also sculpt the repayment profile. But the borrower requires early payments, late payments, skewed towards each end of the spectrum. That is possible for us to do that. Few case studies. This one is quite public. There are some developing ones as well, but this one is in particular interesting. This is the UK DESA, which is the Defence and Security sort of export organization of UK, and Babcock. So these are minesweepers, and then Ukrainian government has been the borrower and the buyer of those, and we have put together this facility covering 100% contract financing with a 3-year grace period, and put in place in 2 months. So that shows that we can be real quick. And this was not small, right? 300 million pounds. So that's a good example. We can always, when in the Q&A period, I can refer to my colleague, Josh Edwards from UK, who can walk you through on some of the recent case studies. There's as I said, a large deal in Poland in defense, air defense missiles. There is also not yet financed, but we're about to look into the commercial contract is signed. It's public news, so I can share a number of second-hand C-130 airplanes for the Turkish Air Force. That's another deal that the team is working on. This is a good slide for our third country collaboration, where we don't necessarily stick to UK only, as I keep saying. We're happy to work even in the civilian place for other countries' contractors. In this case, it would be CCC-led G2G contract. It could be a Canadian-led contract. It could be a UK-led contract. There could be consortium members in both, and happy to look at both angles as long as we satisfy the UK content. Examples here are quite interesting, and I was sort of more aware of the two. This first one is a 250 plus bed healthcare facility in Guyana. It's an Austrian contractor, Vamet, and UK content has been project and construction management, design and engineering, construction works, supply and installation of mechanical and electrical equipment for the hospital. And our sort of loan was 160 million pounds for this 256 bed hospital, where the borrower is the government of Guyana. So good example from Latin America. This one I was somewhat personally involved in the middle. That's in Serbia. That is a project building into the European motorway network. That's a high technology 5G enabled motorway stretch within Serbia called the Morava Corridor. The builder was Bechtel. So again, a non-UK lead contractor, and the UK content was comprising machinery, construction equipment, trucks and buses, and insurance. That is service, that's property and casualty insurance. This was a €1 billion project, that stretch. We financed 430 million of that, along with MIGA. So it's a multilateral organization, right? So it could be with MIGA, or it could be with other ECAs, other banks. And then the UK content was about 35% of this 430 million. This more recent one is in Saudi Arabia, and it's the Six Flags Qiddiya city. Six Flags, obviously we all know this part of the world. It is a US-based franchisor. It is a French lead contractor. The borrower is the Saudi Sovereign Wealth Fund, PIF, and this is a $700 million deal. It's structured in a Sharia compliant way, Islamic financing. So we have flexibility to do these sorts of things. As I mentioned, currencies before, we can do this if needs be. If the client requires that, we could do that on a Sharia compliant basis for this large amount. But the UK content, most importantly, was mechanical engineering, plumbing, creative services, specialist lighting, and security systems, which enabled us to do this deal. So again, Saudi borrower, Saudi government borrower, a French lead contractor, US-based franchisor, and Sharia compliant financing, which is not small, but also UK content was possible to achieve. Getting to the end of the presentation, maybe I should mention briefly two more important pages. One is the UKEF premium or ECA premium. Because of the service that we do and financing, the risk we take, which is 100% non-payment credit risk on the borrower, we charge a premium. We charge a one-off upfront premium that can be financed from the loan itself. So, which means $100 million contract, say 15-year contract. Let's say the premium is 10% for the sake of simplicity. We would add that 10% on the 100 million. We would lend 110 million. The 10 million we will keep as insurance. The 100 million is available for the project, right, as agreed initially. And the borrower will pay that 110 million in 15 years. So it is financed along with the project. The premium is also financed. The premium, usually for the developing world, it's a calculator, which is a function of the length of the contract, the OECD rating, the credit risk of the country or the borrower, and then some of the repayment terms. So it will provide a number really for sovereign borrowers, a percentage rather, and we will use that and we will finance that quickly. And I remember Wilson mentioning what stage we are involved. We're happy to listen to you at an early stage as well, but when it becomes a real project for us where we start asking questions, putting in our deals pipeline, we start to get supplier pairs, talk to banks who can look into that, is the time when you are almost sure about these items, right? What is the project scope? What is the project? What is the consortium doing, and what are they going to build and sell? What are the terms, the timeline, and all that, right? As first, the project scope. Secondly, the name of the borrower and the guarantor. I expect for the purposes of this audience, it will be either the Ministry of Finance / Treasury of a country, or it can be MOD equivalent of a country, DOD, MOD equivalent. So, but it will be always useful to know that for us to do our due diligence. But I would think CCC, by the time that's introduced, would have a very strong idea on who the borrower is due to their G2G contracting structure. The financing structure, right, we would know by that time whether it's sovereign or corporate or project financing, likely sovereign in this case. Then we have to find out if it is early enough in the process or it's available at an early stage in the project, the planned UK content, roughly, not by line, but we would do some due diligence. We will check around with the UK supply chain that you mentioned to us, whether they're able to deliver it for this project, and then we will come back to you pretty quickly. If you're in need of introductions to new UK supply chain to provide content to make the financing possible, we will also help out on that as well. We would need the value and the currency of the contract, obviously, what is being contemplated, potential major stakeholders, who are the borrower we're gonna use. Is there a different local party? This is more know your customer sort of consideration, duration of the borrowing, obviously, an indicative financing plan would be required, but happy to cover other questions on those.
I'll step in for a moment, just because I know that there were some technical challenges on the call, and I know how distracting that can be as an attendee. Well done, Ozgur. You were not distracted as a presenter. I was. Maybe I'm going to recap a couple of things for the attendees by way of an elevator pitch before we go to the Q&A, if that helps everyone. First of all, thank you, Ozgur, very much for the detailed presentation, and we have seen questions in the chat around accessing a copy of this later. Yes, I think that's absolutely possible. We also look at this presentation, by the way, as a way of introducing everyone to the concept. We fully expect there to be some follow-up, both with ourselves and UKEF, so we'd encourage that. But let me touch on a couple of things that we wanted, to take advantage of this morning to present to you. First of all, the history of this relationship was very much around anticipating government procurement requirements where they were trying to de-risk, where the buyer is trying to de-risk their procurement. And CCC coming in and providing a G2G performance guarantee is helpful, but it's not the only part of the equation. As you all know, financing always comes up eventually, right? Nobody, that whole issue of price elasticity is not going to go away on us. So our ability to partner with UKEF for transactions where you have extended your supply chain into the UK, or you have a partnership in the UK, is a really unusual and interesting characteristic here that we thought we could take advantage of. So you're no longer a Canadian on your own trying to get into a market. You're actually partnering with a firm in the UK. And you're able to leverage that because what we're going to start seeing with the UK, with the European procurements and a lot of the other defense procurements, by the way, we're seeing this in Asia as well, is the term a capability coalition. That term, you're starting to see that, right? Which is, it's a coalition of buyers and they actually feel comfortable with a coalition of suppliers as well, in a manner of speaking. So our ability to partner with British firms uh, reduces some of the supply chain risk and the delivery risk on the part of the buyers. So we think that's a really interesting piece. And now, having said that, another reason you want to be partnering with UK firms as you're going forward in this is, as Canadians, we're not going to be aware of all of the EU procurement and IP rules in terms of compliance with those rules, right? So partnering with somebody who's inside of that environment or knows that environment is always helpful. The G2G procurement mechanism is designed to respect procurement regulations of the buying entity, of the buying jurisdiction. So our default position is we will respect that as a member of the OECD. We will always respect those buying conditions, but having a local partner who understands them and can help you navigate them is helpful. So that's interesting. So now that let's walk through a scenario. You've got a potential opportunity that you're looking at. You approach us as CCC because you think, you know what, maybe this is something that we can do as a G2G. Because the end buyer is a government, as Ozgur was saying, it's going to be the Ministry of Defense or the police or a state agency in that area, aerospace. So it is a sale to a government department. Now they're entering into a discussion around financing. What's attractive about the UKEF experience is their ability to offer 100% financing on transactions. As you know, in a lot of transactions, there's lots of puts and takes on the math. Not that it's a slam dunk at 100%, Ozgur. I don't want to oversell that for you, but I know that ability to offer 100% financing and to look at multipliers has been a very attractive feature that we've seen as we've gone around the world and seen UKEF financing in action. And as part of that, because you're an ECA, your ability to provide that comfort to the banks, your ability to provide tenor that goes into a slightly longer term, as you said, into the 15-year term, those are all very attractive features. So we do see an opportunity where if you started that contracting discussion with us, there may be a point at which we introduce you to UKEF to indicate, look, guys, from a financing standpoint, to increase the attractiveness of the transaction, you may want to engage with UKEF as well. And as Ozgur was saying, the application process is a fairly straightforward application process within our world. For those of you who've worked with CCC, you know that we go through a step of qualifying you as an exporter and then qualifying the buyer and then merging those two in what we call the prospecting stage, where we say, okay, the buyer and the seller think they've got a potential here that we can develop and turn into a formal proposal. Oh, hang on, financing's part of that. That's the point at which we would then look to provide that introduction to assist. So there are a couple of things there that I think are of interest from a process standpoint. The other element that I think was interesting in the MOU that we signed with UKEF back in the spring was the last point that Ozgur made about an introduction to the supply chain partners. In both cases, one of the elements of that MOU, because really it's business as usual for both of us. We do contracts, UKEF does financing, but that agreement that we will coordinate with each other to help make introductions to people, either for UK firms looking for a Canadian partner to prime the contract, or Canadian firms looking for a UK partner with whom to deliver the contract. That's another element that we've committed to in the MOU, and we're hoping to be able to provide some value to those of you who are looking at the markets. Having said that, I'll stop there. My elevator pitch assumed we were in a 110-story building, so I apologize for that. I think if there's any questions or constraints, I know with the challenge on the technology that may have prevented some challenges, but maybe I'll ask Anu and Georgia if we've seen any questions in there that we need to consider, or we'll give you a minute for that. Hang on. I'm going to open up the questions. I did just see a question there. Hang on. Is there a minimum value? So good question. There is. It's not a hard minimum. But for instance, for CCC to engage, we have a fee structure that we charge for the G2G mechanism. And the minimum fee structure comes in at about $1 million, but really you want to be closer to 10 and upwards from there. Ozgur, you may have a view as well in terms of when it makes sense to engage on ECA financing, but you know, we'd really encourage it to be 10 and above. There are exceptions, but we would encourage it to be at least $10 million.
Absolutely. I would echo, we do have our commercial programs have, minimum of £1 million really. But I should say, we're talking about international financing, usually to a sovereign, and there would be a minimum that the banks would ask, right? And if it's not we can't find a bank for a minimum, then it's very hard to finance that. The other thing is that the countries they may have their minimums in order to look into international financing, because it's not local financing for them. They may change from country to country. They may see a $50 million deal feasible as minimum, whereas some other country may see 10 million as a minimum. We would be flexible within the complexity of the borrower, whether they want to finance this or not, because this is going to get into their international debt log, things of that nature. But also whether the banks, the banks that work with us are willing to do it. Reason I'm saying that, because of the documentation, despite the fact that for deals about 30 million, we have our documentation negotiation in-house by UKEF. For the ones below, it's left to the bank. But essentially, there's a fixed cost of this documentation negotiation. If it's 1 million or 100 million or a billion, the legal costs wouldn't change that much. And so we have to be guided by what the market dictates.
Yes, thanks, Ozgur. Yeah, I think we're both saying the same thing. There's a scale economy here, and you kind of want to be up in the $10 million range before it really starts to attract attention. And then, as you said, the buyers sometimes have their own criteria. Mathieu is asking a question about essentially the application of export control certificates. Yeah, that process will always apply separately and independently of the financing discussions, and you're always encouraged to look into that and understand that. In fact, we have direct experience with a firm, interestingly enough, that was a UK-based firm that was assembling a product in Canada that was then being sold in a market in Latin America. And the organizations didn't appreciate the impact of the export control certificate, in this case coming from the UK. It was a timing issue. But as we all know, the release of export control certificates are generally, certainly in the Canadian situation, subject to approval pretty much at the time of delivery, almost, right? It really moves along. So you do need to explore as to whether you're going to be governed by export control conditions as well.
And similar for us, the export licensing, if required for that particular project or product, is an integral part of the documentation. So we would start working on the financing. The commercial contract may be still in negotiation, right, until the final terms, and the export licensing might be moving in parallel. So by the time we will avail our financing, we should be sure all other documentation, commercial or export licensing, under both or more countries sometimes. And I've been in a deal, in a civilian satellite project earlier, which required, because it was Airbus, it required licensing from both UK and France. The equipment required both. And yeah, there was a timing mismatch. But yeah, we would wait until everything is cleared and then avail the financing. But that doesn't mean that the work is in series. We wait for it and then start the structuring of the transaction. Things can go in parallel at the stage that we are all comfortable, as stakeholders, including our borrower, both agencies here, because CCC will be in that contract negotiation, so that there's a high chance that that would be export licenses granted from all the suppliers.
Perfect. Yeah. Neither of us, neither UKEF nor CCC, gives you a free pass on export control certificate or anything like that.
Absolutely.
We still have to meet all those conditions. I see there's a quick question on cybersecurity. Yes, we have been involved in some discussions on cybersecurity. Interestingly enough, the nature of those discussions are such that I can't really share the details. But yes, cybersecurity projects are included, and it is an area where Canadian companies are seen to have some expertise. In a case like that, I would encourage you to speak to, if you want to connect with ourselves, we have account directors who will be assigned to you if you don't already have an account director, and they can help you with that. And now I've got another question, a three-part question here from Parag. Can buyers be private entities? Buyers can be private entities. With CCC, we're typically only involved when the buyer is a public sector buyer, when it's a ministry. So there is the ability to provide a G2G service to a private entity, but it's really a very, very uncommon practice on our part. So we're really focused on selling to the ministry of so and so. The nature of the nature of the security that we provide is much more relevant to the public sector buyer than it would be to a private sector buyer. So I can speak to that only from I'll answer just from a contractual standpoint, Ozgur, and then if there's a financing piece, I'll ask you to step in. So that's the first part. Typically, we're selling only to public sector buyer. Can defense-related infrastructure be considered? Yes. Absolutely. We do a lot of infrastructure already. That's one of the other larger practice areas for CCC. It's ports, railways, highways, airports, that sort of thing. So yeah, that kind of building is quite common for us, and we're familiar with it. And are there restrictions in terms of countries that can or not be considered for imports? Yes. Yeah. The usual list of sort of no-fly zones. For certain countries, whether that's due to ITAR restrictions, whether that's due to export control certificates. We can usually give you an early read on that, and we'll typically coordinate with our colleagues at Global Affairs Canada to say, look, we'll do a quick geopolitical check. We're looking at speaking to country X. What are your thoughts on selling defense products or aerospace products there? And they'll come back. Obviously, we won't sell to countries where there are embargoes and things like that. Yeah, go ahead.
I would echo that, really. As I said, the export licensing is an integral part of all the documentation, in this case, for both countries to be satisfied before the loan disbursement. So we will obviously do the initial checks, right? I mean, we would assume that this is a deal, this is a project that the export licenses can be obtained. So kind of pretty clear that obviously everything is going to have to take a while, but the assumption in the beginning that there's a reasonable comfort that this will be granted. The other restriction could be, despite there is no export licensing restriction from both countries, we may not have appetite for a country, credit appetite, right? So it's always good, and this has been the case so far. And my friend Josh just added a link, our international appetite, that is public news, so you can really go in and check yourselves. It's alphabetical order, country by country. It's on the Gov.uk website, and if that country we have appetite, then happy to have a discussion. If it says case by case or call us, then we can still have a discussion, but it's less likely that we will be able to do that. Maybe I should briefly just introduce, if Josh, if you can come to the camera, because Josh Edwards actually co-heads, is the deputy head of our defense and space team. And that would be very good to have a facial sort of an introduction. And Josh, anything I missed in between, please feel free to fill in.
No, I think you covered everything. Good morning. Was it just tipping over to the afternoon in where you guys are? Yeah, lovely to be part of the session. Please do circulate my contact details if you have any defence-related inquiries. Happy to have those further discussions. But just to echo some of Ozgur's comments, there is increased flexibility. You know, we like to think we're at the leading edge of that flexibility within UK export finance. So seek us out and have that conversation. We're pleased to have it.
Super. Thanks, Josh. And I see one last question as we're getting close to the end here. The environmental services question that I see, Angelo, you're asking. If it's a general, you know, where do I go? Who do I talk to? Usually that's the Trade Commission Service. Our suggestion is typically the Trade Commission Service helps you with some of the introductions. And then as you narrow it down and you realize you've got a government buyer and they might be looking for this kind of security that comes from a G2G, that's where you then come back to us. And we have a different program for selling to the US than we do for rest of the world as well, by the way. But I'd invite you to circle back to us with a more detailed discussion on that particular one. Dual use, are there populated dual use tech, healthcare, SAR, the military? Yes. Short answer is yes. Debbie, you're asking that question. Sorry, Debbie. Yes, Debbie with the United Kingdom. Sorry. Yes, there's some. In fact, we've developed a capabilities guide, which we're working on, and which we're working on sharing with UKEF, that actually profiles Canadian companies in these sectors who have those kind of dual use capabilities. And it's quite interesting, actually. The healthcare, the firefighting, a couple of those solutions are absolutely transferable across sectors. I think it is noon. I know we're scheduled to wrap up here. There we are. Okay, George is right on top of things here. She's put a note in here. So I guess what I'm going to assume, Georgia, is that you'll contact us at Canadian Commercial Corporation for general questions, and then we'll be providing the deck for UKEF as well. I think that's, thank you very much, everyone, for your attendance. Our apologies for sort of an unusual mixed technical environment on this particular one. We'll sort that one out going forward. But again, thanks so much. And Ozgur, if you've got any closing thoughts, I really appreciated your time, guys. We're looking forward to working with you.
Exactly. I appreciate the time and the devotion, really, by CCC to organize this, and if everybody in the audience. We're here to help. We're very flexible, as mentioned, to come up with a sort of a mix that would enable both countries to excel and be successful in these contracts that you would face. CCC would lead on the contracting side, and we'll be happy to provide financing solutions for you and for your client. And thank you. We will circulate the deck. We will add our contact details both here and in London so that you can reach us as well. Thank you.
Fantastic. All right. Again, thanks so much, everyone. Really appreciate it, everyone. Cheers.
Bye-bye. Have a great rest of the day.